So something just to mention that's really important on this video is that of all the IPOs that were priced and scraped from the Nasdaq website, only around 25% of those could I find price information for. So those IPOs had either disappeared, failed, delisted, whatever the reason is. The analysis that you're about to see is done based on the IPOs that I could still match price information to. Nothing that you see in this video should be taken as financial advice. You should definitely do your own research and just ask for the data if you need it, but please do your own research before you make any trading decisions. So after analyzing 1,500 nearly IPOs, I've got something interesting to show you here. Now, don't take anything in here as financial advice or an instruction to go and trade based on this information. Do your own research for sure. If you need the analysis, just ask for it. But this is quite interesting. So what I'm seeing here is when I look at the magnitude of the size of returns when it comes to IPOs, and I look at it in the different time steps, so day 1, day 2, day 7, day 22, day 65, etc., however many days after launch. What I'm doing here is I'm just saying, okay, let's take the average of the returns that are above zero and compare them to the average of the returns that are below zero, i.e. it made money on long positions or it lost money on long positions. And what I'm seeing here is that with these IPOs, the returns on the upside certainly seem to be more than the returns on the downside. And I haven't split this by year yet or anything like that. I mean, I've got some other analysis here looking at years, etc., which is for something different. But this is quite interesting, and this has happened in every single time frame. Now, obviously, over time, the returns are much, much greater because more time has passed. But what's interesting is the fact that the blue bars are greater in size than the orange bars. That's what matters to me. So what that tells me is that it kind of makes sense to just go long on IPOs, right? And if you look at the previous video, then within about 65 to 90 days, for example, after, or within 3 months of that IPO going live, then just sell the position. Because 3% of the time, IPOs are usually ending up rather than down more than they would, so 53% of the time, IPOs are ending up more than they are down, which is consistent with market behavior. But not only that, the size of the returns on IPOs seems to be better than the size of the drop. And so what that tells me is, depending on whether you trade options or not, options can be tricky. So if you can option on these IPOs, probably the premiums you're paying are not worth it. But nonetheless, my point here is that it appears from looking at the data that I'm looking at that IPOs deliver higher returns on the upside than they do losses on the downside. How would you trade that? I don't know. You tell me. I think that this is quite interesting, and I wasn't expecting to see that. In fact, what I was hoping to see is that IPOs would actually be performing very badly, and therefore it's actually worth shorting them, which is something I really wanted to look at doing. But I'm seeing data that is telling me I'm wrong, basically. And this graph on the right here is just showing the delta between the two, right? So if I look at the code, it's very simple code here. All it's doing is it's just saying the delta, it's just saying take the averages of the up returns minus the averages of the down returns. That's your delta. That's all that means is, what's the difference between the two? And the size of the blue bar doesn't matter so much here, as does the fact that it's always blue, right? It's always blue, meaning that the blue bars are always greater than the orange bars. And that, to me, signals something quite interesting. So what do you make of that? Let me know. But again, just reporting out what I'm finding because I find it damn interesting, and I think some of you guys and girls do as well.